It was certainly a busy day for the U.S. dollar. We started the New York session with the greenback trading strongly against all of the major currencies. The dollar actually hit multi-year highs against the euro as well as the New Zealand dollar. But things changed quickly after the ISM manufacturing report came out. The data told us that manufacturing activity contracted as fastest pace in 10 years. So the index dropped to a 10-year low. And that sent the dollar tumbling lower, erasing all of its earlier gains to end the day lower against many of the major currencies. The ISM number is a problem because while it reflects a smaller part of the U.S. economy that represents manufacturing, the U.S. is more services-based. It certainly indicates that the slowdown in other parts of the world are hitting U.S. businesses. And the fear is that this slowdown in manufacturing is more broadly seen in the economy as a whole and will translate into weaker labor market conditions, not just for the manufacturing sector, but for the economy in general. What's disconcerting about the report is that the employment component of ISM manufacturing also hit multi-year lows. So we're definitely seeing some weakness in the manufacturing sector labor market. Now this is important because we have non-farm payrolls scheduled for release on Friday, and the worry is that when we get the actual broad-based jobs report, we're going to see a slowdown rather than an improvement in job growth like economists expect. So U.S. dollar fell across the board with dollar-yen dropping below 108. This actually represented a shift in sentiment for the greenback because throughout the month of September, we had seen more dollar strength than weakness. The dollar index hit multi-year highs, and we're starting to see a bit of that fade. And if we do start to see more consistent weakness in U.S. data, that could become a more consistent trend. Now, in terms of what we could see in the next 24 hours for the U.S. dollar, first of all, given the expiry of 107.50 options in dollar-yen today, the downside is open or wide open for a move lower, particularly if we have a softer ADP report on Thursday. The next 48 hours will very much be focused on the leading indicators for non-farm payrolls. So watch ADP, watch non-manufacturing ISM, watch jobless claims, because if we get downside surprises in most of those releases, that's really going to set the stage for the market positioning ahead of the NFP report and looking for some weak numbers that could drive the U.S. dollar lower. So dollars in focus this week, definitely keep an eye on all the data reports.